What's up, traders? Welcome to Hope Pips, your go to channel for turning trading dreams into reality. I'm beyond excited to share a strategy that's been a game changer for countless traders, the rally base rally RBR setup. Imagine catching a bullish wave right where the big players, banks, hedge funds, and smart money are fueling the market's momentum. That's what the RBR is all about. In this 20-minute deep dive, we are going to unpack this powerhouse pattern, show you how to spot it like a pro, trade it for consistent pips, and sidestep the traps that trip up most traders. Whether you're new to Forex or a veteran looking to sharpen your edge, this video is packed with insights to boost your profits. If you're new to Hope Pips, hit that subscribe button, give us a big thumbs up, and join our community of traders chasing financial freedom. Ready to ride the RBR wave? Let's get started after the intro. Hi everyone, I hope everyone is fine. Welcome to our channel. If this is the first time you come to our channel, please watch our previous videos, then you will understand this topic well. I will leave those videos and playlist links in cards. Okay, without wasting our time, let's get into the topic. Here is the topic. Chapter 1, the story behind the RBR setup. Alright traders, let's start with the story. Picture this. A few years back, I was staring at a EUR USD chart, frustrated after another losing trade. The market seemed chaotic until I discovered the rally base rally setup. It was like finding a treasure map that showed where the big players were making their moves. The RBR changed my trading game, and I'm here to share that map with you. So what is the RBR? It's a price action pattern that screams bullish continuation. It's like the market saying, hey, we are going higher, and the institutions are driving the bus. The RBR happens when the price rallies, pauses to catch its breath, and then rallies again. It's a signal that the bulls are in control and smart money is piling in to buy orders to keep the trend alive. Here's the breakdown. First rally, the price shoots up, driven by strong buying pressure. Maybe it's a breakout after a strong economic report or institutions jumping in after a pullback. The second one is the base. The price hits the brakes, forming a tight consolidation zone. This is the demand zone, where institutions are quietly loading up on buy orders, absorbing any selling from retail traders. The second one is the rally. The price takes off again, breaking out of the base with a fresh surge of bullish momentum, confirming the demand zone strength. Why does this matter? The RBR is a window into institutional behavior. During the base, banks and hedge funds are building their positions, setting the stage for the next big move. When the second rally hits, it's their buy orders kicking in, creating a supply-demand imbalance that drives prices higher. At Hope Pips, we are all about following these footprints to trade with the pros, not against them. Let's make it real. Imagine GBP USD on a 4-hour. The price rallies 80 pips after a Bank of England rate hike, consolidates for a few candles between 1.3700 to 1.3720, then surges another 120 pips. That consolidation is your demand zone, a gold mine where institutions are buying. The RBR works because the market is always balancing supply and demand. After the second rally, the price often revisits the demand zone to find new supply, letting institutions defend their positions or add more orders. Stick with me, and I'll show you how to spot this setup like a hawk. Chapter 2, Spotting the RBR in Action. Now let's put on our detective hats and learn how to spot the RBR on your charts. The RBR is like a neon sign in the market, but you need to know where to look. Since the market is fractal, this pattern pops up on every time frame 15-minute, 30-minute, 1 hour, or even weekly charts. Here's how to find it, told through the lens of a trader's journey. Imagine you're analyzing USD JPY on a 30-minute chart. You notice a sharp rally, say 60 pips after a strong US jobs report. That's your first rally, driven by institutional buyers or market optimism. The price then pauses, forming a tight range of small candles for few candles. That's the base, where the market's taking a breather. Suddenly, the price blasts off again, climbing another 80 pips. That's the second rally, confirming the base as a demand zone. Sounds simple? It is once you know what to look for. Here's how to pinpoint the RBR first rally. Look for a clear upward move with strong green candles. The bigger the rally, the stronger the signal. A 60 pip move in a few candles shows serious buying power. Base nothing but demand zone. Find the consolidation after the rally. It's a cluster of small candles with low volatility, showing institutions accumulating buys. Mark the zone using one of these approaches. Zone approach. Draw a rectangle around the entire base from the highest high to the lowest low. This gives a broader zone but a larger stop loss. Key candle approach. Zoom in on the last bearish candle in the base where the next candle closes above its high. This is a bullish setup perfect for precise entries. Micro pattern approach. Look for wicks or inside bars in the base. These often hide lower time frame demand zones visible on a 15-minute chart within a 1-hour base. Second rally. Confirm the breakout from the base with a strong bullish move. A sharp surge or gap up shows institutions have triggered their buy orders to make sure it's a solid RBR. Check these clues. Rally power. A strong second rally, like 25 plus pips in a few candles, signals heavy institutional buying. Base duration. A short base few candles means a bigger supply-demand imbalance, making the zone stronger. Freshness factor. Demand zones are strongest on their first off fresh, with unfilled institutional orders. Another real-world example. On AUDUSD's 30-minute chart, the price rallies 40 pips, forms a base at 0.7400 to 0.420 for 10 candles, then surges 60 pips. On a 1-hour chart, that base might look like a single bullish candle and confirmation candle. Practice spotting these on a demo account, and you'll start seeing RBRs everywhere. At Hope Pips, we believe in training your eyes to catch these setups like second nature. Next, let's talk about turning these patterns into profits. Chapter 3, Trading the RBR for Maximum Gains. You've found an RBR, now let's turn it into pips. Trading the RBR is about entering when the price revisits the demand zone after the second rally, riding the wave of institutional buying. Let's walk through a trader's playbook to execute RBR trades like a pro, with a story to bring it to life. Picture this. Malesh, a Hope Pip subscriber, spots an R on ESI/USD. The price 70 pips forms a base at 1.1800 to 1.1820, then surges another 90 pips. He waits for the price to retest the demand zone, and here's how he nails the trade. Playbook for trading the RBR. Pinpoint the demand zone. Mark the base using the key candle approach for precision. Highlight the last bearish candle in the base, from its low to its high. For malicious EURSD, the demand zone is 1.1800 to 1.820. If you prefer a broader zone, use the zone approach to include the entire base. Wait for the retest. After the second rally, the price often pulls back to the demand zone as buying momentum slows. This is where institutions defend their buy positions or add more orders. Malesh waits for EURUSD to revisit 1.810, staying patient to avoid fakeouts. Confirm the setup. Look for a signal that the demand zone will hold. Malesh spots a pin bar with a long lower wick at 1.1810, showing buyers rejecting lower prices. Other signals include bullish breakout, a green candle breaks the resistance zone. Lower time frame breakout, a 15-minute chart showing a breakout above the zone's high. Execute the trade entry. Malesh enters long at 1.1815 after the pin bar closes. Alternatively, enter on a break above the zone's high. Stop loss is placed 5 to 10 pips below the demand zone's low. Target the next supply zone, a recent swing high or a 2-1 to 3, 1 reward to risk ratio. Malesh aims for 50 pips for a 2-1 reward. Position size risk 1 to 2% of your account. For a $10,000 account, Malesh risks $100 on a 25 pip stop loss. Manage the trade. Malesh trails her stop loss to break even after a 20 pip gain. He watches for supply zones above, say at 1.1880, where she takes partial profits if the price stalls. Checking the 4-hour chart, she confirms no major resistance blocks her target. Malesh's result. The price hits 1.1865, banking 50 pips. That's a clean Hope Pips win. To avoid disruptions, Malesh uses Forex Factory Economic Calendar to steer clear of news events, link in the description. Practice this playbook on a demo account to build confidence. Track these strategies in a trading journal to find your sweet spot. At Hope Pips, we're all about precision and profits. That's it, traders. You're now ready to conquer the rally-based rally setup and ride bullish waves like a pro. From spotting demand zones to avoiding traps, this strategy is your key to trading with the big players. At Hope Pips, we're here to fuel your journey to consistent profits. So practice these tips on a demo account first. Next up, we'll tackle another high-octane setup to keep your pips flowing. Subscribe to Hope Pips and hit the bell icon to never miss a video. Love this. Smash that like button and share it with your trading squad. Drop your RBR questions or wins in the comments. I can't wait to hear from you. Stay ahead with Forex Factory trading tools. Link in the description. Trade smart, stay disciplined, and keep chasing those pips with Hope Pips. Catch you next time.